Hey, what's up everybody? Today we're diving deep into some juicy insights from NIO's latest Q&A session with your fearless leader, Li Bing. I summarize and extract 6 main points from this Q&A that you should know today. Well, my friend, you probably know them as a company that's been trying to shake up the EV market in China. And they've done some cool things, like they initiated battery swapping station and pushing out some serious impressive EV tech, right? But here's the kicker. They've been in the red for quite some time. They've been burning cash like crazy. And people have been asking, how long can they keep going? Well, here I'd like to see whether you're an American investor or in the Asian stock market or just someone with a keen interest in the EV world. This one's just for you. The questions like why you should care, what the future looks like, and what it means for your investment strategy. Hi, my friend, I'm Sheila Wang. My goal is to give investors a fresh perspective on Asian concept stocks. If you don't want to miss out on quality stock analysis videos, make sure to click that subscribe button and give me a thumb up. Now, let's dive into today's topic. The first topic I extracted from the Q&A is NIO's financial position. Not as bad as you think. NIO's founder Li Bing recently had a chat with the media. He's basically been answering every burning question people have been asking about the company's future. And one thing Li Bing made very clear: NIO is still healthy. They've got over 42 billion yuan in cash on hand. There's a lot of cushion, my guys. They're not about to go belly up anytime soon. But here's the thing, they've been in that growth stage, and growth is expensive. But don't worry, they're not panicking. Li Bing pointed out that they've already been through 5 years of challenges since 2019, and as of now, their cash flow is stable and sales are still climbing. So, how do they plan to turn things around and actually start making money? Li Bing set a target for 2026. When they plan to break even, they're still way off, but let's be real, 2026 is not too far in the future for a company that's got plans to double their sales next year. They've got a lot of work to do. Increase sales volume, boost gross margin, control costs, improve operational efficiency. And guess what? They're not afraid to take hate if they don't hit that target. 2026 is their bottom line. They know it's make or break. So yeah, this is serious business, folks. And the second main point I extract from the Q&A is NIO's big launches ahead. ET9 run Firefly. Now let's talk about the future. NIO is looking ahead to 2024 with a couple of exciting launches. The first one is the new ET9, a luxury flagship sedan. This bad boy, seriously high-end, is going to compete with the big dogs like BMW, Audi, and Mercedes. And what's the pre-sales price? A cool 80,000 RMB. That's a serious price tag, but it's new statements to the world that they're not just here to be good enough for the middle class. No, they're gunning for the luxury car market. And let me tell you, luxury electric cars are hot right now, so don't be surprised if NIO pulls off a major win there. And then there's Firefly. NIO's third brand is set to be a mini car designed to compete directly with the BMW Mini. That's the whole vibe. We're going to price it between 100,000 and 150,000 yuan. So it's a pretty affordable high-end car. It's going to launch at the NIO's Day 2024, and there's a lot of buzz around it. Well, if you would like to know more about the Firefly, you can check my former video that showed all I know about the Firefly. The third main point from the Q&A is Li Bing's reflex. A bumping road. Alright, let's get real for a second. When Li Bing was asked about how he felt about NIO's performance, he wasn't exactly throwing himself a party. In fact, he gave the company a 60% score for 2023, and thus being generous. The growth was there, but it was slower than expected. Instead of the planned 160,000 units, NIO only hit 120,000 units. That's a miss. But to be honest, it's understandable. The market has been a nightmare for EV companies. Prices are getting slashed everywhere. As you know, BYD, for instance, is going full throttle with aggressive pricing. So new sales hasn't exactly been exploding like we hoped. But it's important to remember that NIO isn't just competing with other EV companies. They're also battling it out with traditional car markets who are jumping into EV space. It's brutal out there. Li Bing's honesty is refreshing, though. He admitted they didn't hit all their targets, but he doesn't sugarcoat it. They know they've got work to do, especially in terms of execution and efficiency. And if you're thinking about investing in NIO, this transparency is actually a good thing, right? Because guess what? NIO knows they've got to get their act together. And that means there's a real chance for improvement moving forward. If they can execute well, 2024 could be a huge year for them. And the fourth main point is the crazy competition at hand. Okay, so NIO's not in the clear, right? Here's the kicker. The competition is insane. We're talking about Huawei and Xiaomi entering the EV market with full force. And let's be honest, these companies don't play around. But Li Bing isn't backing down. He respects Huawei and Xiaomi's tech and he's learning from them. But at the end of the day, it's all about product. Sure, Huawei can build amazing phones. The Xiaomi has a loyal following. But NIO is betting on their superior product and service to keep them ahead. One of the challenges, though, is the technology race. The EV market is highly technical and there's no room for shortcuts. That means NIO needs to stay ahead of the curve when it comes to tech. They've invested heavily in their own in-house chips and full-stack technology for their cars. And while they don't have the market power of the giants like Huawei, they've still got some major innovative potential, my friend. So don't count them out just yet. The fifth important point is EV market in China, you should know. Where's it going? Let's zoom out for a second and look at the bigger picture. China's automotive market. The growth in electric vehicles have been explosive recent years. In fact, the market share of EVs in China has already hit a staggering 61.4%. That's insane. Just a few years ago, the ideas that EV would dominate so quickly seemed out of reach. But here we are. But what does that mean for NIO? Well, with China's push to become the world leader in the EVs, NIO is a prime position. But here's the catch. The market is starting to saturate. That's right, guys. Growth will slow down. But there's still plenty of room to grow in international market, especially in Europe and Southeast Asia. NIO's already made some moves in Europe, and while they're not dominating yet, they're building their presence. That's huge for the long-term growth of the company. The sixth main point from the Q&A is new supply chain. Challenges ahead last thing. This is actually a pretty big deal, especially as we see global supply chain issues impacting manufacturers across industry. Li Bing admitted that in front of heavyweights like ATL and NVIDIA, NIO doesn't have much negotiating power. These guys control the supply chain and NIO's gotta play by their rules. But here's the interesting part. NIO is pushing for domestic chip production to reduce reliance on international players. That's an ambitious goal, and while it's not easy, it could be a game changer in the long run. So what does all this mean for you as an investor? Well, the bottom line is that NIO is in a tough spot right now. They've got competition from every angle. BYD, Tesla, Huawei, and Xiaomi, but NIO isn't just going to roll over. They've got the cash, the vision, and technology to make a comeback. And if you're in it for the long game, NIO might just be the EV stock to watch over the next few years. So should we buy NIO stock right now if you don't have any in hand? That depends, my friend. It's a risky investment, for sure. But if you are looking to play the long game with a company that has huge upside potential, it could pay off big times in the next few years. Lastly, as always, don't just take my word for it. Do your research and decisions if NIO is a stock that fits into your investment strategy. That's it for today's update, folks. If you enjoy the content, remember make sure to hit that like button and subscribe my channel. And turn on notifications if you don't miss a single update on the stock market. And let me know your thoughts on NIO down in the comments. Do you think they can pull off a comeback this time?